Yesterday we went over the money management algorithms, the VIX swing for the E-mini S&P. That just took a trade today. I'm going to show you that trade. Here is the trade, and now we're going to go over the E-mini Nasdaq version of this strategy. The E-mini Nasdaq took a, the strategy shows that it would have been in here and exited here after two losing trades right here. And so let's take a look at the performance summary for this strategy going back to the beginning, 1999, July of 1999, and nice equity curve. This is a closed trade equity curve. It does not show you the intra-trade drawdowns, but you see that there is a $25,000 drawdown on the base strategy because this does not use a stop loss to get these results, and so we have to manage it with the money management algorithms in order to get these to trade this equity curve algorithm. So we go over and look at the money management algorithm and take a look at how you would manage this equity curve. So here is the money management algorithm version. It has not traded in a while, but we're mainly focused on the modern time period from beginning of the recovery in March of 2009 because of this upward moving market. And so we're going to take a look at the results of that to capture how the money management algorithm works based on current market conditions since March of 2009. And you see here some streaks where this equity curve does really well. Here's a drawdown. Here's that $15,000 drawdown. But since February of 2016, you see this. And so one of the things you can do when trading strategies or using money management algorithms is to try to jump in on straight line equity curves and risk. If you can risk a small amount to do so, there is a method for doing that. And what we do is we take a look, for example, let's go back to February 1 of this strategy and February 1, 2016 to see what the worst case drawdown is during that time frame. And so if you're jumping in on the trend and you see February 1, 2016, you say, okay, well, the closed trade drawdown is 2150, open trade drawdown is 2600. You know, if you want to, say, risk $3,000 per contract to jump in an effort to capture the moves in this market, you can do that in this type of approach with this money management algorithms. Nice average trade profit of 362, and so nice results. I like the results in the E-mini S&P better. The Nasdaq moves more, but it also has more, wiggle in it. Non-directional volatility versus directional volatility, which is what we like. And so there's a lot of counter moves, more counter moves in the NASDAQ. So even though there's potential more explosive moves as well and trends. So you have to balance that out. And this is just one way to trade. Let's see, here are the rules. We look at the NQ, we are pinpoint entry, buy drawdown, and the pinpoint entry is still 350, same as the E-mini S&P. And you start trading when it's in a $3,000 drawdown, and you stop when it's in a $3,000 run up. We have one maximum daily entry, $1,000 stop loss, $1,000 profit target, and those are all the rules that we use on this. Let's see some of the trades. You get some of the most recent trades in August. These profit targets look very small on this chart. If you look at it, I mean, it works here because it gets out there and then it gets back in here, and in this scenario. So there's probably ways to improve this. I'm just showing you the results using the same exact parameters since February 2016, and how you can take a strategy like this and try to capture the equity curve of this strategy. So if you're taking a look at this strategy, it's a $3,000 drawdown. What you would do is you would get in, maybe wait for it to get in a trade and for it to be down, or for there to be one loser. So you kind of buy the midline of this equity curve, and then you trade this to a worst case drawdown. And then once you have if you are able to capture $3,000 in profit, then you are kind of at the break-even point because you use that worst case drawdown as a bit of a trailing stop loss on your equity curve. And this is how you can trade individual systems as well as portfolios. And so that's one way to trade the money management algorithms. It's one way to trade the Nasdaq and take advantage of the VIX swing strategy on the E-mini Nasdaq.